Welcome back to Teshkid FX for another Quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Quant chart, which at the time of this recording has managed to get above the key area of resistance at around the $133.2 mark. We are also trying to battle out the 20-day MA here on the 4-hour chart, which is acting as resistance, and that is after fully maximizing this red target area that I had down here in the formation of this wave 4, and I believe this could be the start of another bounce to the upside in the formation of this wave 5 to the upside to complete an even larger Elliot wave count 1 to the upside. And before I give you my next price targets here on the Quant chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that after seeing the all-time high, we started the bear market where we had been seeing no prices in this ABC corrective structure, which gave us a low at around the $40.1 mark. And after seeing the bear market low, we started another bounce to the upside in a move that has been obeying the Elliot wave structures, where you can see that I have this Elliot wave structure in blue, having the wave 5 making its peak at around the $229 mark, and also completing a larger Elliot wave count 1 to the upside. And after seeing that larger Elliot wave count 1, whatever we expected next is a corrective structure in the formation of a larger Elliot wave count 2, where we also expected to see an ABC corrective structure fully maximizing the formation of that wave 2. And that ABC corrective structure gave us a low at around the $94.4 mark. And after seeing the low for that second wave, whatever we expect on the long-term scenarios is a bounce to the upside in the formation of this wave 3, and sketching out a minimum target area to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1. Then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $398.2 mark, and that is the minimum that I'm expecting that wave 3 to the upside to do. And in the formation of that wave 3, which is an impulsive wave, I'm also expecting to see a 5-wave structure in formation, and I believe we are seeing such a move right here, having that as the first wave. Then we have seen a corrective structure in the formation of that wave 2, then started another bounce to the upside in the formation of this wave 3, which has fully maximized our target areas and also given us a peak at around the $165.5 mark, before we started a corrective structure in the formation of this wave 4, which has also fully maximized our target area in the formation of that wave 4, which I was able to come up with by connecting the the Fibonacci's from the low of the second wave to the high of that wave 3, and that gave me a minimum target area in the formation of that wave 4 between the fib level 0.382 and the fib level 0.618, and that is after losing the fib level 0.618, I was able to extend my target area back to the fib level 0.618. And that target area is between the $140.7 mark and the $125.8 mark. And now we have seen our low at around the $129.4 mark. And now I believe that we might have seen the low for this fourth wave to the lower side, and there are chances that whatever we are seeing at the moment could be the start of a bounce to the upside in the formation of this wave 5, which I'm expecting here on the short-term scenarios. And for us to get enough confirmation that we are seeing whatever we are seeing over here is a bounce to the upside in the formation of that wave 5, I'm expecting a break above the 20-day MA here on the 4-hour chart. And the moment we manage to break above the 20-day MA, have the support that we need for us to continue pushing even higher, also continue holding above this key area of support at around the $133.2 mark, which we have just managed to break above at the time of this recording, where I'm also expecting to see a retest of that key area of resistance because it was acting as resistance. And once that happens, then we can continue pushing even higher to get to the next key area of resistance at around the $147.9 mark. And in case we also manage to break above that key area of resistance, I would be expecting to see a retest before we get to the wave 3 high, which is another significant high that we need to manage to break above for us to have enough confirmation that whatever we are seeing over here is the bounce to the upside in the formation of this wave 5. And once that plays out, then we can fully maximize our target areas to the upside in the formation of that wave 5, and sketching out a minimum target area to the upside in the formation of that wave 5 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the high of that wave 3. That gives me a minimum target area to the upside in the formation of that wave 5 at the fib level 1.618, and that is at around the $228.7 mark, and that is the minimum that I'm expecting that wave 5 to the upside to do to fully maximize an even larger Elliot wave count 1, which is a fractal wave, within the formation of that larger Elliot wave count 1 to the upside. And on the worst case scenarios, because we also need to have a worst case scenario that can play out here on the Quant chart, and that is in case we lose the key area of support at around the $133.2 mark, also continue holding below the 20-day MA and continue pushing even lower, maybe fully maximize our target area in the formation of this wave 4 and also see a break out of the target area and continue pushing even lower. Then I'll be expecting Quant to get us back to the next key area of support at around the $110.9 mark, where we can either find support, and in case such a move plays out, then we can expect either that support line to either hold, and in case it doesn't hold and we see a break to the lower side, then I'll be expecting the next key area of support at around the $100.3 mark to also hold. But for me, I believe I'm in favor of this move to the upside, continue pushing even higher to fully maximize our target areas in the formation of that larger Elliot wave count 5. And I'm also expecting a break above the $147.9 mark the moment we manage to break above the 20-day MA, because we will be having the support that we need for us to get to the next key area of resistance at around the $147.9 mark, and also manage to break above the wave 3 high at around the $165.5 mark. So that is what I'm expecting on the short-term scenarios and also on the long-term scenarios. And also taking a look at the indicators on the RSI, we are trading at around the 48 mark, meaning we have massive room for us to fully support higher prices in the formation of that wave 5. And also taking a look at the MACD, we have been able to print a bullish cross, fully supporting higher prices in the formation of that wave 5. So let's be patient and see how that plays out, and I'll be keeping you updated.